Everybody, this is Jim at SP500chart.com. It's Sunday afternoon about 2:40 here on June 30th, 2013. We're going to take a look at the market as the markets as they ended on Friday, June 28th, 2013. Before we do so, I need to remind you, this is also our little weekly review, which frankly I wish I didn't have to own up to, because this week was a bit well, started out okay, but then it just frankly got a little hard to get a feeling for direction, and it's still not easy coming into this new month of July. But before we take a look, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Hey, let's take a look. It's funny, every time I say hey, I feel like maybe I've picked that up from Uncle Si on Duck Dynasty. If you haven't seen that show, it's great. But hi. He's always, whenever he's talking, hey, look here, look, hey, look here. Sorry, I feel like I'm doing that. But that said, let's take a look. First thing I've done is I've highlighted the week in this little gray box, just so we can kind of put it in perspective. Coming into this week, we had already seen a break of some fairly important technical lines. The first was this lower green line that, as you recall, was the lower line of a consolidation pattern that took place after we broke down from yet another rising channel that had been going on for a long time. As a matter of fact, our rising channel had been working, this yellow line had been working all year long with the exception of one brief interval. Then we went into this more aggressive rising channel that had worked since the middle of April. Okay, we saw that breakdown last week. We had a target from that breakdown, and our target from that breakdown was roughly 1572. Now, I thought we might have done well enough with that move to about 1578, and mentioned coming into this week that what we saw develop on Friday, which was between these two lines, would either play out as an inverted head and shoulders that would end up taking us up over 1600 to roughly 1618, something like that, just based upon this little dip that we had here. Or if this line broke right here, then we should be looking for the low 1560s. Well, so coming into the week, it was pretty good. We came down, did break this pattern did play out as a bear flag, and we came down to about 1560. There it is, a little bit more up close and personal. Now you're probably saying, Jim, there's a line on the chart that I have not seen before, which you lines up with that low of 1560. Yeah, we're going to talk about that. This could be an important thing. So anyway, we started to move up, and I think by the end of the day on Wednesday, we had developed what appeared to be an ascending channel between these two gray lines, and I was hoping that this channel would take us all the way up for a solid back test of the underside of our support in that consolidation pattern. And it didn't quite do it. Additionally, I thought maybe, so that's one thing, didn't, at least so far, hasn't panned out. It still could, but so far it hasn't panned out. Additionally, oh, by the way, and let me say, it certainly hasn't panned out that we would make that move inside this channel. Okay? That channel started to get weak on Thursday. I mentioned the action looked a little funny, that maybe we would recover and get back up to this line. That did not happen. So, hey, strike one. Second of all, I mentioned that we may be seeing an inverted head and shoulders pattern here. And if we did, look for support around 1610. And there on Friday, we get back down to about 1601, at least briefly. Strike two. Okay. And that's where we ended the week. 2 strikes against me, 3 strikes and I'm out. But let me show you still what I think we could be looking at. To begin with, I don't put a tremendous amount of faith in the last 15 minutes of trading of a week. Sometimes I don't put a whole bunch of faith in the last 15 minutes of trading just on a daily basis. Either the last or the first sometimes gets a little squirrely. But when we're at the end of the week and we see this candle right here, that's something that can very easily reverse. And the reason I say that is this. Even though we did close underneath this neckline, potential neckline, we opened under it essentially, not quite, but got under it quickly after the open, recovered, came back, bounced, got up a little bit, bounced. Then we saw that weakness. Coming into Monday, I would be I would be looking for a potential, if we get a potential strong move up, then I would be looking for a pretty nice day on Monday, because we still could stand to get this back test done. And this still could play out as a small inverted head and shoulders pattern with a target of approximately 1646. That still is alive in my mind, but it did not play out the way I thought it would this past week. You can also see that we had identified a very small little channel of sorts that looked to be like maybe it was a bull flag. That broke down early on Friday, and then you can see how both the bottom and top lines continued. You know, we could even fudge this a little bit and say maybe that's really what it should be. But you can see that these top and bottom lines continue to at least offer some support and resistance, if nothing more than speed bumps. These two technical lines seem to still be exerting some influence. Finally, we got that support at around 1600, 1598, and I would still consider that to give us some support. So let's see what happens coming into Monday. Now, if we get this back test up to about 1638, 1640, and then we start to head back down, that's where this line becomes interesting. Because let me go out to a 2-hour chart. My lines are going to get a little goofy on a 2-hour chart, particularly these little short-term ones. But here's where it gets interesting. I am willing to say that this is a fairly important bottom right here in the short term. But if we were to back test up to the mid 1600s and then start to head back down, you seeing this? The table is set for a potential Head and Shoulders top. And we've seen a bunch of these in the past. If we look on a daily chart, we had one here. We had one here. We've not had one here yet. But they happen fairly regularly. If we look on a 2-day chart, here, here, here. This one's a little irregular, but here. And we've had a bottom here, 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 and here. I'll draw so you can see that we've been in a pattern where each top has been met with a fairly quick bottom being put in. But we have had neither top nor bottom of any sort in a recognizable form for about a little bit more than 6 months. So it feels like we're kind of due. Now, if we do get this Head and Shoulders top, if it were to form that way, and all I'm saying at this point is this is something that is worth keeping an eye on. I am not predicting, because it's not a top until it forms as a top and it breaks down as a top. But every time we've had one of these, I think in the past 2 years, we've tried to anticipate their formation. And you can see that if we look at a long-term chart, we have to go to a 3-day chart here. If we look at a long-term chart, I've got this little series of yellow lines that lead us to the breakdown and the forming of a top at each time that has taken place. And I can bring this one back to here. I just extended it out to see if we maybe got a back test. So we start a rally and we head up with a support line, break it. Make a bottom, rally, make a top, break this line, make another bottom. We have broken this line already. But some of these tops, such as this one, really formed themselves on the back test of that broken line. You can see here, this one that we had back in 2011 that was really a significant, pretty significant top that trend line broke, back tested, and then it really broke down strongly. Now we're dealing with a smaller scale in 2013, so I don't know whether I would expect a huge, at least an initially large, tumultuous move. But you can see, if this is a top, we've got some important support lines that are within, I guess what you could say, that are within range of any expected minimum downside target. So this is something that, even though we're seeing smaller moves as we go, I think we need to keep a careful eye on this blue line if we get there, and on this red line. If we start to see some of these important rising support lines break, then we need to ask ourselves, are we seeing something more ominous, or are we just seeing another little intermediate top that sets up another buy the dips? So basically, I think we've discussed the week in pretty much detail. I wanted to try to put that in context. I want to remind you too that as we have this underside of our consolidation pattern that should provide resistance now, since it used to be support and that clearly is broken. I want to remind you also that at some point up and around the mid 1600s, low 1600s. I can't tell you exactly where it would be, but when the wheels really started to come off back here around the 19th and the 20th, I think we would additionally find some gap resistance up around this area. So let's just put a line up there for us to keep in mind gap resistance. All of this to say, we have a cluster of resistance right about up in this area here for a number of reasons. Gap resistance, trend line backtest resistance, as well as resistance from this descending line that is drawn over the last two significant tops. So we got a number of reasons to think that that 1640, 1645 area could be really a tough nut to crack. So even though our target takes us up above that into the around 1648, I believe, 1646, 47, that may be hard to manage with this other trend line action that is going on here. So guys, that's it for the video. Taking a look at the past week, looking at what happened on Friday. I think the moral of the story is this: right now, at least in the short term, it appears to me that we are likely to be closer to support than we are resistance. So I'm kind of going into the week thinking there could be an upwards bias, and but there's nothing still that strong on the chart that tells me, yeah, we're just going to power on up, because we've got this potential head and shoulders, inverted head and shoulders here, but it's looking a bit squirrely. So guys, that's what I mean when I say this week has been a tough read, because we get little moves, and then we get a little counter move, then we get a little surprise. So with the breakdown of this narrow gray channel, it's kind of hard to get too excited about thinking this is a strong market that we're in, because Friday we saw, even though it was not down but only about 7 points, we still saw some weakness creeping into the markets. So let's see what happens with Monday. It would be great if we got that rally that set us up for that back test. Then we would kind of have an idea what to expect. But until we get a sense of direction as to whether or not that back test will happen, as far as I'm concerned, coming into Monday, this could go up, this could go down. And again, here's my reasoning. It could go up because we could get a back test. We haven't gotten it yet. It could go down because we've broken down through this channel. It was a nice rising channel that lasted almost all week long until late Thursday and then Friday. So I guess what that means is I feel kind of useless to you this week. But hey, I just want to be honest, and I don't think I would be serving anybody any benefit or doing anybody any favors by trying to convince you of some sense of direction coming into the week of July 1st, when frankly I can't arrive at that. So maybe in the market's favors the fact that we're at the first of the month. Let's see. Maybe watch the futures tonight, early in the morning. Maybe we get a sense of direction there. So guys, thanks for watching the video. Take care of yourselves, and especially thank you for your support.